What's up everyone, it's Scotty with Money Vesting. So welcome on board for another Market Open live stream after a long weekend. We are back in business, but obviously the markets are pulling back here. We've got the NASDAQ down another 1.3% pre-market. We've got the S&P 500 down over 1.1%, and the Dow is also down a little bit over 1% right now as of the time of this recording. And of course, the bond yields are also dropping. They're down a little bit over 2.8%, and the 10-year yield has now come down to 2.838%. And as a result, the TLT and TMF ETFs are pushing higher right now pre-market. So they are pushing up. Volatility is higher, so it's up a little bit over 5.7%. There we go. We're back over 29 levels on the VIX. And oil prices, again, somewhat back and forth here, just trading at $110, $111, $112 a barrel. And Ethereum had a very nice jump, but all of that is now starting to fade back down, as it's down a little bit over 4%, with Bitcoin back under 20,000. Once again, trading down a little bit over 4% at the moment. A lot of individual stocks are also down here pre-market, but I'll let everybody join in. And tell me a little bit about how was your weekend? What did you do during the long weekend? For everybody at least who was celebrating that 4th of July. And then of course, we will also start with our poll as well. So Jacob says garbage analysis. Thank you, Jacob. Appreciate the kind words, man. All right, markets today. So we're going to do green, red, or flat. So let me know where the sentiment is and what is everybody feeling today after the long weekend. And then we'll also go over the upgrades and downgrades. We'll talk a little bit about the calendar. By the way, this right here is something that I shared with all of our members. If you want to get access to our July 2022 economic calendar, which basically goes over every single thing that is coming up later this month from today. So Monday, Tuesday. So Tuesday we don't really have anything, but this week, then of course next week, we've got every single little detail that is going to be important for the markets to be watching for. You can download this PDF for yourself. So this right here is the first half of 2022, right? So the first 6 months, and you'll notice how brutal the month of June was. This is also something that I shared in our Discord, and we've got some of the major ETFs in the markets. So we got S&P 500 down over 8% in the month of June. The first 6 months down almost 20%, so obviously in a bear market. Dow 30 down over 14% year to date, down 6.5% in the month of June. NASDAQ was down almost 9%, and year to date so far we're down over 29%. And then every part of the market, so every segment, whether it's mid caps, small caps, Russell 2000, Russell 1000, Russell 3000, everything was down at least over 6% in the month of June. With the exception of Dow 30, everything was down at least 8%. So brutal sell-off in the month of June. And then you look at some of the other parts of the market, whether it's the S&P 500 growth sector, S&P 500 value, mid-cap value, S&P 500 equal weight ETF, or the dividend stocks, everything down 8%, 9%. And all 11 sectors in the S&P 500 were down in the month of June, with utilities down the least. Actually, consumer staples were down the least, only down 2%, followed by healthcare, followed by utilities, but energy taking most of that pain, down over 17% in the month of June. So it was pretty much nowhere to hide in the month of June to close out the quarter. Cryptos, commodities, bonds, everything's been selling off pretty much this year. So just an insane amount of momentum here to the downside. But when we talk about the second half, there's some strategists saying that the second half is also, quote unquote, not looking too good. So the good news is that the first half is now over. The bad news is that the outlook for the second half is not looking good. Although the investing landscape looks somewhat perilous, HSBC suggested there is room for better performance later in 2022 if inflation cools down and central banks are able to adopt a more balanced stance. This right here, again, is going to be the calendar that is available on our Patreon. So if you want to get access to that yourself, you can download this PDF and take a look at everything, every single date. Earnings are going to be coming out later this month. So we've got lots of earnings over here with 3M, AMD, Chipotle. Then we got also Google over here on the 25th. Tesla's on the 21st, I think, a little bit earlier. Or I think they're on the 19th. let me see. Tesla is actually on the 20th. So July 20th, Tesla is going to be reporting. And of course, we got over here Vertex, Meta, and then Apple, Amazon are going to be on the 28th. So everything is included in this chart. Inflation numbers are not this week, but next week on the 13th and the 14th. And the Fed meeting is actually on the 27th when we have the press conference and, of course, the interest rate decisions as well. So super, super important. Euro slides to a 20-year low against the dollar as recession fears build up. So obviously the dollar has been very, very strong, and relative to all currencies, it's been pushing higher, getting stronger, and unfortunately all the other currencies are getting weaker. I can say for Indian rupees have gotten really, really bad as well in terms of the strength of the Indian rupee relative to the dollar, and in the case of euro, it's sliding to a 20-year low. Hitting a $1.02, almost $1.03 by mid-afternoon in Europe, having earlier been as low as $1.028. And this right here is going to be some of the updates on Tesla, Occidental. I did a video on yesterday. ExxonMobil and Chevron, I also did a couple of videos on them. So make sure that you do check out those videos if you're interested in my take on energy companies and energy stocks overall. But Tesla over the weekend announced that they delivered just a little bit over 254,000 vehicles, which obviously came in a little bit shy of the analyst consensus estimates. But that being said, of course, we expected a lower number because of the lockdowns over in China and production in the Shanghai Gigafactory. And of course, the revenues, unfortunately, are going to be lower than their first quarter for Tesla. Occidental, once again, gained over 1.3% as Warren Buffett continues to pump more and more money into this company, and they bought a little bit over 9.9 million shares, and they now have their stake at 17.4%. I think their overall position is worth roughly $10 billion right now. And ExxonMobil also up 1.3%, as they said, late last Friday, that they are expecting second quarter earnings could be as much as $18 billion for the company, which is not a surprise. We went over that in our full analysis on what the expectations are for earnings growth, which is well in the triple digits, well over 100% for 2022. So it's not a surprise that earnings are going to be absolutely insane for a lot of these companies for this year, for energy companies specifically. So 10-year treasury yield slips as recession fears rattle the markets. We talked about the 10-year yields kind of topping to some extent, and they're definitely going to be on my watch list. Now, have they hit a peak? Obviously, nobody knows, right? I can't tell you guaranteed that, okay, that was a peak at 3.5% and we're only going down from here. We are pulling back on recession fears, but the Fed is still doing quantitative tightening in the background passively. So they are allowing their maturing securities to retire, and they're not actively buying any more mortgage-backed securities in U.S. Treasuries. So as a result, once they ramp up that number from $47.5 billion, which is right now, to $95 billion in about a couple months, then that could continue to put some upward pressure on yields, because that puts downward pressure on the prices, and prices move inversely to yields. So 3.5%, 3.4% is still something that is on the table. It's still a possibility, but certainly we have seen a significant move down on the 10-year yields, and they have come down. The bond ETFs, TLT and TMF, have greatly benefited from that very much, and that was part of our one of our trades as well. Trade ideas that I know bonds are boring, but in my view, I think the money is starting to move towards those safer ETFs, and that's the flight to quality that we're seeing right now from the markets. So, okay. Moving forward, these major economies are headed into a recession in the next 12 months, one of the analysts says. So one other thing I point out, when you have many economies weakening, you can't rely on exports for growth. That's another reason why we think the recession risk is still very real and will likely happen. Rob Suburban, a chief economist at Nomura. And they basically see that the U.S. recession is going to start at the final quarter of 2022. So Nomura forecasts a shallow but long recession of 5 quarters, starting from final quarter of 2022. So that's exactly the time when I'm actually going to be in the U.S. in October, literally at the start of the last quarter of 2022. But they are forecasting the recession to last all of 2023, at least that's what their estimates are, and to begin in the fourth quarter of 22. So we'll see, what happens with the U.S. So the U.S. will fall into a recession, so negative quarter-on-quarter GDP growth starting in Q4 this year. It is going to be a shallow recession, but a long one, and we have it lasting for 5 quarters in a row. And the U.S. Federal Reserve and European central banks are among those seeking to temper record inflation with the rate hikes. Obviously, we've got a Fed meeting later this month, and they are probably going to be doing 75 basis points. We'll take a look at the Fed Watch tool to see where those estimates are for the Fed. So that pretty much wraps up our analysis. Again, this week we don't have a lot of things coming up. We have Joel's numbers tomorrow, and we've got the FOMC meeting minutes, which is going to be very, very important. So those are the really two important stuff. And then we've got unemployment numbers later this week on Friday. So that's going to be the participation rate week, and then participation rate, average work week, unemployment rate, and then a few FOMC members also talking this week as well. So James Bullard's talking on Thursday. So at 1 p.m. Eastern. So that might be important, but the most important thing is going to be the FOMC meeting minutes and Joel's numbers, and of course the main unemployment numbers, government data coming out on Friday. And the next week, of course, is when we have the inflation numbers on 13th and 14th of July. So QQQ down about 1.5%. We got the Dow down over 1.3. The S&P is down 1.3 also. Let's take a look at some individual stocks, shall we? Nvidia down to 141, down over 2.5%. AMD continuing to struggle, obviously, with everything that's going on, of course, in the broader markets. And then when you pile on all the additional fears and uncertainty in the chip sector, semiconductors overall, it's down over 2%. Then we've got PayPal down another 2%, coming down to $69. Google is down over 1.2. Tesla is down 2%. Tesla actually opened okay. It didn't really gap down all that much. Despite the delivery numbers coming in slightly shy of estimates, but it's pretty much in line with the NASDAQ and the markets right now, down about 2%. So Amazon's down about 1.4, Meta's down 1.39, and then we've got Apple down over 1%. Energy, I think, is doing slightly better. XLE, well, it's down about 1.2%. So earlier it was green, now seems like we have turned a little bit. So ExxonMobil down close to 1%. Occidental is also down about 60 basis points, so reversing some of those gains from a pre-market. Upstart here, let's take a look, is also down about 2.5% at the moment. So once again, a bit of a quiet chat today. Not a lot of people talking. So what's up, guys? What's going on? How was the weekend? How was the long weekend? What stocks are you looking at? How are you preparing for a potential recession if there is going to be one? What are you doing differently? I also did a video on how to prepare for a recession. I'm working on a spreadsheet, which is simple, just about creating a budget. So let me know if you're interested in getting that. It's a very, very simple spreadsheet, tracking your income expenses. Really, really important to have a budget, whether there's a recession or not. I've been using it for years. So let me know if anybody's interested in getting that. So Richard says market sucks. Another red week because most of us are depressed. Well, that's the thing. You can't really have the markets affect your day-to-day well-being, right? Markets are just one part of your entire life, right? So you can't allow the markets to control you in a way that it's end-all be-all. It is what it is, and if the markets are doing great, you are happy. If the markets are doing poorly, then you are sad. It can't be like that, right? So you gotta figure out a way to compartmentalize in your head to when you're working, when you're watching the markets, when you're trading. Okay, you're in the zone, but once you're out, right? You can't just be just be depressed with the markets are selling off, right? So it's really important. So anyway, let's take a look. So Nick says, just studied all of your work output. Thank you so much for that. I really appreciate that, Nick. So Lol says Meta $100. What does that mean? Are you asking if Meta's gonna go down there, or yeah? What's the question there? So Breezy says I'm moving towards dividend stocks. So that's a great strategy. I think dividend stocks, companies with cash flows and providing you guys with dividends, I think is definitely a sector that could benefit during times of potential distress and if economic growth really slows down. So I do have a dividend portfolio. I've got JP Morgan, Intel, Walgreens, Realty Income Corp. Some of those companies are some of the top dividend stocks that I personally own. Of course, Walgreens has been underperforming. It's done really poorly, over the last couple months, and even in the last quarterly earnings, I think it was down like 7%. So still trading under $40, but I don't mind picking it up. Okay, let's see here. So what's up, Kat? Here, you officially a financial advisor? Not yet. It's gonna be a while until I become, but because the schedule is so busy, so I really find the time to study for it. But it'll be a while until I can do that. So yeah, but still studying for it. let's see. How low would you think AMD will or might go? So that's a great question. I think AMD, my low end target is about $58. Again, that's me being a little bit more objective and keeping my biases out of it. Even though I like the company, I'm bullish on it long term. I think $58 is a very real possibility for AMD, and that's going to be only because that's a previous resistance for AMD, right? So previous resistance, we have gotten rejected at that level time and time again. That was right before we got that big breakout for advanced micro devices, going back as far as July of 2020. So previous resistance, in my view, is going to be that next support. We are certainly very oversold, and we're also hitting that lower low inside this downtrending channel. So right now, AMD is at support, but if it continues to be very, very weak and breaks down even further, $58 is going to be that support. All right, let's see here. Hello, everyone. This is your daily dose of internet. Thank you. Okay. So AMD, there we go. Ronaldo to Chelsea. I don't know. I don't think he's gonna. I don't think he's gonna make that move. I'm surprised there's not a lot of offers for him. He's still at freaking an insane level, scoring a lot of goals. I don't understand why there's not a lot of offers. I would prefer for him to go to Bayern Munich though. So Alexander, where does the money go? So much selling. I think that's a great question. And I, only posted this simple thing or like a text in our Discord earlier saying that stocks were selling off. QQQ was down over 1%. We have, S&P 500 down, Dow Jones is down, but you've got TLT up over 75 basis points, right? TMF is actually up more since it's leveraged. It's up a little bit over 2.2%. Energy is down. A lot of individual sectors are also down. So I do think, and again, we were talking about this last week. TLT was also part of my, quote unquote stocks that I'm buying. I did pick up more shares last week. People are getting more defensive, right? And that's the market positioning that we're in. I think we have to understand and distinguish between when the market is on the offense and where it is time to actually play on the defense, right? And the market's right now very much in this defensive mode, where it needs to focus on capital preservation. So I think TLT is kind of like this flight to quality trade where people might be moving away from equities. They have been for the majority of this year, and TLT has also been selling off. But I think now investors may be putting some money to use by getting into TLT, and that's as a result. Last week also the markets were down, but TLT was up, right? So last week TLT pushed up over 3%, I think, close to 3%. So it was up 2.9%. And this week, once again, we're starting to see a little bit of rotation into bond ETFs. So we'll see if this continues to work out or not. Okay. So, all right. Oscar says, come on, chat. This is where we make our money when the markets are down. Great stocks at crazy cheap prices. Don't be scared. I like that. I appreciate that very much. Odish, I'd be interested in Spreadsheet Caddy. Did you watch Kathy Wood's video? I have not yet. I know she posted a video over the weekend. I have not yet checked it out. Only because I feel like it's going to be more and more of the same stuff. I think I watched like the first 10 minutes, I think. Again, it was mostly about solving problems, innovation, and deflation. And by this point, I think I've heard so much Jerome Powell, Kathy Wood, Michael Burry. Like I've heard so many sort of things and read so much text and reports that it's starting to become very repetitive, right? They're not changing their script, and unfortunately, it is. Every time, I think everybody here can agree. If you hear Jerome Powell talk today, how many of you would be actually interested in hearing him? I know I wouldn't, because I would already know what he's talking about or what he's going to say. So it's not really like a market moving event anymore, because it's just, he's saying the same stuff. So yeah, I haven't really looked at her video yet. I've watched the first 10 minutes, but maybe I'll do like an update on it if there's any like stuff that needs to be covered. Caddy, good idea to get into TQQQ long. Well, only from a trading perspective, not from an investment standpoint, because it's levered. So make sure that you are using proper stop losses, and of course have a plan in place when to get in, when to get out, right? So with any trade, rather, you should have a plan: entry, exits, profit targets. Everything should be laid out. Write it, right? Write it, and then you just have to follow that plan. That's all it is. Okay, let's take a look here. All right, Walgreens is a really low valuation. I do agree. Aaron, welcome on board. Thank you so much for the thumbs up. Yes, we'll take a look at NEO here in just a minute. Alex, can you take a look? Alex Ascati, can you take a look at Xerox as a dividend stock? I haven't really taken a look at Xerox. I know that they are reporting earnings very soon. They did come up on the earnings calendar, but yeah, I haven't really done any analysis on this company. 7% dividend, wow. So 7% dividend, that's again very appealing, but don't just go on the dividend. We have to really understand what the company is doing in terms of fundamental analysis, revenue, earnings, all that stuff. So maybe I'll put it on the watch list to see if there's any potential for Xerox. So what do you make of biotechs in this market? So I do like biotechs, like the biotech ETF in general. I've talked about how they've been really, really oversold. And I think last week also biotech outperformed. Yes, I forgot about that. I was going to mention that, then I forgot. Biotechs also outperformed last week, where S&P, NASDAQ, and the Dow were all down. So we had two sectors of the market pushing up. It was the bond market and it was biotech pushing up. Both of them outperformed last week relative to the overall indices, overall markets. So yeah, that was interesting. We'll see if we actually continue to see some more upwards momentum on biotech, and you'll notice that we've actually seen lots of consolidation here. So it could be forming kind of like a bull flag, and if you see actually push higher and break out from this bull flag. Okay, let's take a look here. So where do you see Apple in the short term, going in the short term? So Apple here has got a support at 137, 138 levels. Right now 137.57. So overall, you can see that it's in a very strong downtrend, right? So it's been making lower highs and lower lows. My support for Apple is sitting roughly in the 120s down to 116s. My fair value is at 115. So if it does drop to that level, I would be very aggressive in picking up more shares. But right now, it just needs to validate the support at 137. It's been validating that level for a long time. We did break down, we pushed higher, so lots of consolidation right now from the markets. So we'll see where it ends up. You should design your own ETF. No, not there yet. Okay, let's see. So thoughts on Shopify. Shopify, I'm going to be doing a video on them after the split. I haven't really done a video, but we have analyzed this stock plenty of times. There's, I think, at least 5 videos that I know of that I've done on Shopify before. But again, price to earnings, price to sales, cash flows, those multiples remain rich. For the company, it's down a little bit over 1.6%. So the support I'm really watching is going to be $30 for Shopify. So that's the level that I'm watching. Fair value for Tesla still at 475. Yes, so still at 475 for now. But again, depending on the growth estimates and the P multiple, I'm giving them a 25 PE and a growth estimate of 50%. That gives me a PEG ratio of 0.5, I think. Yeah, so 0.5 is the... Actually, is it? Yeah, I think it is. 25 divided by 50. Yeah, 0.5 PEG ratio. If I go to 50 price earnings multiple, which is where it's trading right now, like on a forward basis. Forward basis right now it's 55 to 76, depending on your earnings per share estimate. Then of course the fair value would jump by 100% at over $900, which I think would be very aggressive. So my fair value is 475 for Tesla, giving a 50% growth rate in earnings and a 25 PE multiple for that company. So yeah, so that's the level that we're watching, but support level is going to stay put roughly in the 620s for now. 620 is going to be that next support level, and then we've got a much stronger demand in the $540, $550 level for Tesla. All right, so 15 minutes left for the markets. Let's take a look at NEO also. NEO is slightly down about 1%. They had a very strong report on deliveries, but look at where the resistance was, right? So we talked about this in several of our previous videos. We talked about $24 is the big sort of like the key breakthrough level for NEO because it's the same exact level that we got rejected at back in April of 22. So you can see right here, NEO getting rejected at $24, and it's the same level. Same level sellers stepped in to bring us right back down. So It should be interesting if we do get that breakout above 24, then 27 is next. But right now we're just starting to come down a little bit. But at the same time, it's got a nice uptrending pattern as well of higher highs and higher lows. So this right here is definitely something and worth taking note of. So if you do come down, I'll be watching, $19, $20, $20 really is what I would be watching, and then resist of course stays put at $24. Okay, let's take a look here. All right, let's take a look at Alibaba as well while we're at it on Chinese stocks. So Alibaba, resistance right now at 120. So that's going to be the level, kind of like that intermediate resistance here at close to 120. So we've gotten rejected again, same exact pattern to what we just saw for NEO, right? Getting rejected at the same level from back in April for Alibaba as well. So it got rejected at 120. We're once again getting rejected at 120. For NEO, same thing. $24 was that resistance, getting rejected at $24 as that same resistance. So for Alibaba, 120 all the way up to that next resistance, which is going to be at around 129, closer to $130. But the good thing is that they are starting to break outside of this downtrending channel. So this right here, the lower highs, for the longest time, we're now starting to break above these levels, and I think same thing for NEO as well. So yep, so it's starting to kind of break out very nicely from this downtrending channel overall. So the overall trend is starting to shift a little bit more bullish, but it's just those resistance levels that are holding us down. If you get those breakouts, then technically speaking, there should be more potential upside. All right, so let's take a look at the markets. QQQ is still down 1.27, SPY is down 1.28, and we got the Dow down over 1.25%. The yields now down almost 4%, so pretty aggressive sell-off here, down to 2.8%. Volatility still up over 6% now, coming up to 30. By the way, I did a video on seasonality charts. I don't know if you guys did check it out, but according to these seasonality charts, during midterm elections, does anybody want to tell me which 2 months the volatility spikes the most? I want to see who watched the video. But yeah, which 2 months in that video I went over in the seasonality charts, the VIX spikes above 40 during midterm elections. Years during midterm elections. So we went back as far as the 1950s. So that was like 70 plus years worth of data. So right now, we obviously haven't been that elevated. We have been higher, but we have certainly not broken past those levels. Ooh, Dewey says July. Otis says November. Alex says August. So Anonymous says March and September. So during midterm elections, yeah, if you go back and watch that video, it was August and September. So August and September, those 2 months when volatility tends to spike the most. There we go. Sanjeev watched it. There you go. Perfect answer. August and September were the 2 months where the volatility spikes the most and gets above 40. So, that's one of the reasons why we haven't or may not have seen a definitive bottom in the S&P 500, so to speak, because the volatility hasn't really gotten us that spike, or the S&P hasn't really gotten us that full, like a final flush type deal, like full capitulation for the market. So we'll keep a close eye if they do, get higher, if this starts elevating a little bit. So yeah, September is always the worst month of the year, based on seasonality as well. So Breezy says I watched it and forgot, getting old. That's okay. You got one right, so I'll give you props for that. So, but yeah, September usually has been one of the worst months, and we'll continue to analyze some of the seasonality data, even though it has no implications on what the future could look like because this is a completely different market environment. But it's important to understand what's happened in the past, with respect to the markets, the midterm elections, volatility, all that stuff. So, Aaron, Caddy, thoughts on a Fed pump or a Powell pump this week? It's hard to say. He's not talking, so there's nobody on the board here except for member Williams here, FOMC member. Then we got James Bullard speaking later on Thursday, and then we've got another member Williams talking on Friday. We do have the FOMC meeting minutes at 2 p.m. Eastern coming out tomorrow. So if anything, that will be, that could be a little bit more aggressive because that's going to tell us what was discussed, right? Not what they did. We know what they did. They raised the rates by 75 basis points, but what was discussed during that meeting, right? And it's going to give us some more guidance as to what could we expect a couple of weeks from now when they actually have their press conference on July 27th. So I think those are some key catalysts to watch. Other than that, he's not really talking. So, the markets are mostly going to be looking for those JOLTS numbers, FOMC meeting minutes, and then unemployment Friday, which is going to give us a good understanding on where we are, how many jobs we added, and is the jobless claims numbers getting higher and higher. So the estimate, I think, is 240,000 for this week, and it's certainly creeping up. We were sub 200K, and now we're back over 240 for weekly jobless claims. Okay, Anonymous says, oof, I was close. Yes, so coin, I will do actually a separate video. I'll do a video on Coinbase and do an update video. I've done videos on Coinbase as well, so I'll do like an update analysis on that company going over. Jobs Friday equals Kathy Wood's new video. I don't think she's going to post on Jobs Friday. Maybe she will, I don't know. But I think she's already posted for the month, so. Richard says in 2021, all months are volatile. In 2022, pretty much all months are bad. Okay, let's take a look at bank here. So HDB, Jesse says. So is that HDFC? Yep, so that's that. So let's take a look at the dividend yield, 1.3%. Very strong, consistent revenue growth here, coming in from 15 billion, well over 22, 23 billion. Nice, consistent earnings growth as well. So margins are growing. That's what we like to see. So that's very, very good. And then overall technicals have been, I think, pretty much in line with what we have seen with a lot of banking names. So, you look at Bank of America, JP Morgan, a lot of its peers have all been selling off and obviously coming down, inside some of this downtrending channel, making lower highs and lower lows. So it's got a decent dividend, not as high as some of the other banks out there, but it's got very nice, consistent revenue growth, earnings growth. Multiples, I'm assuming, are going to be very low given it's a bank. So it's trading at 20 times earnings, 4.5 times sales, and a little bit over 3 times book ratio at the moment. So for a bank, it's still a little bit on the high end, still a little bit rich, but $51 is going to be that support. And then resistance we're going to pay attention to is going to be over here, close to $59 to $60 a share. Coca-Cola is down 4% from all-time highs. Really bugs me. Really? Really? Are we really doing that? Coca-Cola is only down 4% from all-time highs. On Friday, it was up 2.3%, so a very nice move. And year-to-date, this stock's up 9.5%. So, come on, man. Robin. It's like saying that you get like a 99 out of 100 and you're pissed. Like, how could I not ace that test? It's bugging you that Coca-Cola is down 4% from all-time highs. The market's freaking down 30%, man. But anyway, let's take a look at the poll here. We got 60% expecting the markets to be red, 30% green. So certainly the sentiment is very bearish. And then 10% expecting the markets to be flat here. So overall, sentiment is bearish for sure. Elena, thank you for the excellent video, Scotty. If living outside the U.S., thoughts on buying U.S. shares, taking into account that the dollar index has risen quite a lot recently. So yeah, I mean, I basically take a huge hit every time I invest in U.S. equities, right? Because of the foreign exchange, and obviously it's been getting worse and worse. So I'm investing, and obviously in the U.S. in U.S. dollars. So every time I denominate Indian rupees into U.S. dollars, I get a much worse rate because the dollar is getting stronger and stronger and stronger. So obviously, I'm losing like a ton of money on foreign exchange by itself. But then, if the dollar continues to get stronger, then obviously the dollars are worth more against any other currency for that matter. So just for example, I mean, the dollar's gotten much stronger relative to the euro today, right, in the last couple months here, as the euro hits like a 2-decade low at the moment. So there's always going to be a problem with that, with foreign exchange, if you are, again, in other parts of the world investing in the US markets. Pedro, thank you so much for mentioning that. Yes, people, please make sure that you drop a like if you are just joining in. It only takes a second, and let's see if we can at least get up to over 200 likes. I would really appreciate that. Thank you. David, thank you so much for joining. Appreciate that. All right, so less than 3 minutes left for the markets to open. And we do have a lot of individual stocks obviously selling off. We'll see if any buyers find this interesting or find any of these prices interesting. But so far, there's nothing been but net selling at the moment, with Tesla also down to 670. All right, and this right here obviously is going to be the chart on the year-to-date basis. So everything that you need to know about the markets here. Do we have the TLT here? I'm pretty sure we do. Yep, we do. So TLT is down 19%, which is the bond ETF. Then we've got commodities, we've got mining, we've got industrials, materials, utilities, financials, tech, silver, gold. We've got the NASDAQ, we've got energy, we've got volatility, 10-year yields. Everything is on this chart to help us understand what's moving higher or lower on a year-to-date basis. And so far we still have energy obviously up. Volatility is up year-to-date, 60%. It's been a very volatile year. And of course, the bond yields are up over 77%, whereas everything else, all sectors are straight up down. There we go. We're down to 1 basis point. For the difference between the US 10-year and the 2-year, we are down to 1 basis point. We're going to go for that second inversion. The last time we saw that happened back in March of 22. And this right here, we're back at it. We're literally selling off right now. As you can see that. It went from 1 basis point down to now 0.006. This is an inversion. There's no other way to put it. The spreads turn negative. Almost. We're only off by 0.006%. So less than a basis point right now. And this thing is down over 80% right now. So yield curves have inverted once again. So that's mostly because the recession fears have increased quite a bit over the last few days, especially coming after June 27th, right, when the Atlanta Fed drastically pointed down to their estimates in the second quarter to negative 2%. Saw your video on Occidental. I can't get why he's buying so much. Yeah, my best guess is that his plan is to actually buy the entire company eventually for Occidental. So, over the weekend, analyzing the 3 energy companies, Chevron, ExxonMobil, and Occidental. Occidental has the lowest amount of revenues, right? It's only doing $25 to $30 billion versus Exxon and Chevron. They're doing like hundreds of billions of dollars. But the margins are far better for Occidental that are versus Chevron and Exxon, right? So Occidental's got over 60% gross margins versus 30%, 40% for Chevron and Exxon. Net margins that Occidental's doing, I think, is well over 20%. Forgot, but I think it fell over 20, 25% versus Chevron and Exxon that are doing less than 10%. So margins are much better for Occidental, but at the same time, I mean, they've got debt, and they've got plenty of debt, by the way, very little cash and a lot of debt. And free cash flows are positive, so that's good. But it hasn't been very consistent, right? You've seen that, and numbers are there for the last 10 years. It's just been back and forth, and they've been issuing some shares, right? So they've gone from 800 million to over 900 million shares outstanding. So there's only 2. My best guess is that his plan is to buy the entire company, and he's expecting the war or all these supply chain issues, the energy crisis that we're going through, to last much longer than than what the market might be anticipating. So it may be years. In his analysis, there may be years till we get a resolution from the geopolitical tension that we're going through, and of course the energy crisis that is the shortage of energy, shortage of gasoline that could push prices even higher. I mean, just imagine if prices get up to, like, if oil prices get up to $200, $250, even $300 a barrel. If that's if that's even a scenario, what would happen to like gas prices? Like these oil companies would just end up, it would just be like a different world for them. Crazy amounts of profitability and earnings, just insane amount of growth, and that obviously leads to big gains for Warren Buffett. So let me ask this. Wow, oil prices all of a sudden 5% down. This might have happened in the last 5-10 minutes while I was talking. Look at that. Happened right at 9 a.m. We were just looking at this. It was trading at about $110, $111 a barrel. It just dropped over 3.7% in the last 30 minutes. That's crazy. It's down over 5.4%. Wow. So let me ask this. How many people here actually believe that oil prices have topped? They've peaked and they're only going down. And then how many people believe that oil prices are going to see a new high? They're going to actually go up to 147, 150, or even higher in the future. So let me know what everybody thinks while we take a quick round out here and take a look at the markets and individual stocks as well. It is brutal out there. Absolutely brutal. We got Amazon down 2.7, Tesla's down over 3%, down to 660. Google down to 21.29. We got PayPal down over 2.9, almost 3%. We got AMD down over 2.6. We got Nvidia down almost 3%. Apple's down over 1.3. Meta's down 1.5%. Let's take a look at some of the Dow 30 stocks. So Dow Jones, we got all 30 names, all 30 stocks down except for Walmart. That's barely break even, and Merck slightly up 36 basis points. But Boeing, JP Morgan, Cisco, Caterpillar, American Express, Goldman Sachs, Chevron, all of them selling off pretty substantially here. We got energy. Yeah, I mean, look at that drop here, 6% for US oil, WTI. That's absolutely getting destroyed. Yeah, I'm trying to understand. Did anything come out? There wasn't anything supposed to come out. We've got the weekly crude oil stock coming out tomorrow at 4:30 p.m. Eastern. Yeah, that was a pretty brutal drop here all of a sudden, starting at 9 a.m. So Alfred says oil has peaked. Lauren says oil may go higher, but maybe not this year. Jim says new highs for gas. Oil prices will rebound. Oil will go back up. So yeah, I'm seeing more comments about oil might go back up, and you can't rule that out, right? With the crisis that we're seeing right now, you obviously can't rule that out. It's very much still a possibility. God damn it, this thing. But yeah, pretty brutal sell-off here on the day. But Nasdaq down over 1.6%, so we're back under 11,000. We got the Dow Jones down about 1.5%, and the S&P is down over 1.66% as well. So TLT is up almost 1%. If it's any consolation, TLT is moving up close to 1% as the yields are down over 3.5%. So Melanie says, I'm new to this channel. All the content I've been able to watch is amazing. I didn't know you go live. Thank you so much. I appreciate that very much. And yes, we do live streams Monday through Friday from 9 a.m. Eastern till 10 a.m. Eastern, so about 1 hour going over market open, and then looking at different stocks, indices, commodities, energy, all those different sectors and parts of the market to help us understand where the money's flowing. That's the big question. Where's the money going? Is the big question. But a lot of stocks here. Tesla making a new low of day, 657, down over 3.5%. 620 is the next support that I'm watching for Tesla. But the fair value for me personally, like I said, is 475. CNBC headline says due to recession fears. Yeah, I mean that's definitely been the big change since last week. It's only the probability of a recession's gotten worse. We've broken down a couple of reports from Deutsche Bank, Citigroup, JP Morgan. They've all raised their probability of a potential recession from 25% to 50% to as much as 66%. And even the report that we read earlier over here, They said that the U.S. recession, according to some of the analysts here at Nomura, believe that they are going to start in the final quarter of 2022. So Q4 of this year is when the U.S. could fall into a recession, and that's when we could see like a negative quarter-over-quarter GDP decline. And that's going to last 5 quarters according to them. So that means the entirety of 2023, the U.S. could be in a recession. So Brady says we are in a recession. Yeah, so that's very much a possibility because second quarter GDP, like I said, Atlanta Fed revised it down significantly to negative 2%. First quarter, we already knew negative 1.6%. So 2 consecutive quarters of negative decline, and that will not be good. Man, it's just really not a good time here in the U.S. economy. Like, if they're saying that the U.S. economy is going to go into a recession in Q4, I was literally planning a trip in October. I really don't want to be in the U.S. when there's a recession. That would, yeah, I mean, we'll see. We'll see when that actually happens. Technically, it only needs 2 negative declines quarter over quarter, but we'll see what that officially starts when they actually announce it or something. But wow, yeah, I'm looking at oil here. Anonymous, crazy sell-off here. I mean, Occidental is down over 4%. Chevron, Exxon down over 3.3%. Like we discussed the last month, in the month of June, we had, look at all these sell-offs. This is the month of June. The leftmost column here is the month of June, and energy was the biggest lagger in the month of June, down over 17%, right? So significant sell-off here in the month of June for this sector. But yeah, I mean, there seems to be a big rotation. If you take a look at this chart here, energy now is only up almost 18% year to date. Year to date, at one point, this thing was up over 56%. Incredible. I do think that Wall Street, like we discussed, they're not stupid. They understand when earnings will start coming down, right? When the companies like ExxonMobil, Chevron, Occidental, when they will have to report very tough comps, and year over year they'll start to see some declines, and of course they've made a lot of money in energy sector. I mean, it's up 100% since September of 21. So yeah, this is a pretty brutal drop here in energy right now. So this is a higher low that we'll see if it kind of holds up for crude, because we've bounced off of these levels very nicely every time. So this right here, a couple supports for crude. So again, bounce here, bounce, and right here we're trading. We'll see if we actually do break down below this, or if there's any support here for oil. So NASDAQ down 1.83. And the Dow is also down 1.8. So we're starting to see a little bit, Dow is starting to catch up to the NASDAQ in terms of losses, because 2 back-to-back red candles, and the NASDAQ is, obviously it's red candles, but it's not selling off, making a new low of day as aggressively as the S&P 500 or the Dow, since they've got more heavier weighting on the energy sector as well. And how is TLT doing? Yeah, up close to 1%. Close to 1%. So I think if you were to put the pieces together, to some extent, we're somewhat turning more on risk off, right? Very defensive environment where people are getting more exposure on TLT, which is bond ETFs. And obviously energy is the trade that's worked out so well year to date, but the future is still uncertain. And obviously that's why they're starting to kind of relocate away from energy, because the risk reward really is not even that appealing anymore for energy, right? If you buy Occidental at $60, or ExxonMobil at $85, or Chevron at 142, 150, is a risk reward really there? Or most of the gains have already happened, right, for these energy companies? So yeah, very interesting there. Volatility here is up almost to 30, so it's up over 8%. So VIX definitely going higher at the moment. And of course, a lot of individual stocks making a new low of day. PayPal down to 68.91. Google here down 2%. Let's take a look at our banks. So all banks red. Not a surprise, recession fears. All of our cybersecurity stocks, Crowd is the only one that's kind of holding up. Crowd and Zscaler, there are two stocks that are somewhat green here. Crowd is actually up 1%. So definitely a very nice move here on CrowdStrike. And then energy we already went over. FinTech, all red, all down. Upstart down almost 4%. Affirm's down over 4%. Some of the retailers are also down, except for Costco, as David mentioned earlier. It's slightly, pretty much broke even, flat. And then BJ's and Dollar General. Oscar, is this the capitulation that we've all been waiting for? Well, I think it depends on the earnings per share estimates, right? As we've talked about in a lot of detail. I'm not convinced with the S&P here. I just want to see analysts bring down earnings estimates. That's all it is, right? Right now we're sitting at 230. I'd be a lot more comfortable if analysts just bring that number down to, 225, 220, or even as low as 200. Those numbers come down because what does that do? That lowers the disappointment that we may get in the future, right? Because if all the analysts are expecting 10% growth for this year, and overall the S&P 500 grows by 5%, that's a big disappointment, right? And that leads to more drastic moves. But instead, if the analysts already anticipate, okay, recession fears are increasing and we need to lower our estimates for earnings, then the market can adjust to that new guidance or new estimate prior to actually earnings being released. So I will not be convinced until analysts bring down their EPS estimates, because right now that's the thing that's not budged. Everything has moved except for earnings per share estimates. So 230 for this year, 240 on a forward basis, 250 for next year. Still pretty high. So some companies raise guidance. So yeah, I mean, AMD has been raising guidance for the last 6 to 8 quarters, but it's gonna be really interesting. I'm really excited to listen in on the earnings call for chip stocks for Nvidia and especially AMD. I'm really interested to learn what Lisa Su has to say in terms of visibility into this year. She did mention that there is a slowdown in PC demand. So, and then of course we heard from Micron that there's significant slowdown in demand. So I'm really interested to learn what she has to say. And if they cut their guidance, that will be a big shocker for me. If Lisa Su comes out and cuts their guidance, that will be a big shocker for me personally. If they reiterate, I think that's a more likely scenario, that they reiterate that, okay, we're going to grow by 60%. Visibility is obviously a little bit lower than what we previously anticipated, but we still think that we can do 60% this year growth. But if they do a big revise down, because Micron did, then that would be surprising to me too, from a consumer demand standpoint, right? That it's really slowing down. Stefan says this month is going to be memorable. There's a lot of things coming up, right? So we've only just started. And again, this is the whole calendar that you can download for yourself, the U.S. economic calendar for 2022. It also includes the earnings and all those things. So yeah, every single little detail that we need to watch for this week. Ken says, Lisa C. Oh God, I love it. So, all right, Nasdaq seeing a bit of a recovery here. So some green candles coming in. Roblox up 2%, David says. That's incredible. So Oscar, you're waiting for banks to revise everything down. Well, I think they're more likely to do it after the earnings come out for the second quarter. They'll have more, I think they'll have more of a guidance as to what companies are expecting in the third quarter and the second half of this year. So I think they will do that. They will revise their guidance down after the earnings season. But once that happens, I think the key number that we need to watch is the earnings per share, right? Where do they end up being from $230? Where do they come down to, right? Because that's where the P multiple will come into place, and that's what we really know where the S&P 500 could end up based on historical trends, 15, 16, 17 times earnings. Again, it's all math, right? We're all trying to understand what happens to earnings per share. As we've discussed, everything that you read from a macroeconomic standpoint, everything, whether it's consumer demand, consumer sentiment, interest rates, inflation, recession, whatever we hear from a macroeconomic standpoint, everybody's trying to understand how is that going to affect the bottom line, which is the earnings per share. That's all that matters, right? Consumer demand slows down, corporate profit slows down, earnings per share take a hit. Recession happens, earnings per share take a hit, right? Inflation goes up, margins decrease because the company's cost of production goes up, earnings per share take a hit. So at the end of the day, it's like everything affects earnings per share. So we're all trying to understand where will be the EPS for S&P for this year. So Roblox 4% now. Let's take a look. So very nice move. Let's just go over our entire watch list and see what's actually moving, green versus red, and we'll do some analysis. Let's take a look at Apple here. So just about 138. We're seeing AMD kind of recover a little bit. We're seeing Nvidia push higher. PayPal is also starting to recover a little bit, with Amazon only down 80 basis points and Meta 1.6%. Somebody mentioned NASDAQ recovery equals Meta still down. Yeah, definitely. I mean, that's one stock that sentiment's been really, really poor for that company. But let's take a look. We've got Grab Holdings up over 6.5%. We got Crocs up 4.6%. Roblox, Datadog. We got Micron, Zscaler, LABU, DocuSign. Vertex been doing really well recently, back up to almost 290 here, and CrowdStrike's up over 2.2%, and everything else obviously down very much. Yeah, not a super bad day. I mean, the worst stock we have is ASML, down 5.6%, and then Astrospace down over 3%. So usually when we see these wide swings, you'll find stocks that are up 10%, down 10%, down 15%. But right now the lowest that we have is 5.6%. Of course, there's a real bloodbath happening in oil, where there's stocks down 4 or 5% right now. But look at that. So far, we are still validating the support. There seems to be some buyers stepping in at this higher low. And NASDAQ starting to make a new high of day here. We'll see if we get back up over 10,000. Yeah, 11,000, not 10,000, 11,000. Stefan, Caddy, when do you think the Fed will pivot later this year, next year? Honestly, I don't want the Fed to pivot. Well, it's just such a difficult topic. It's so complex, man, like really, because on one hand, there's a case to be made that the Fed has no control over inflation, right? They've admitted that. They can control the supply of energy and food. So even though they keep raising rates, they're going to probably induce a recession. They're going to push the U.S. economy into a recession. I think that's when they start pivoting. But if they pivot, right, if they start actually cutting rates to fight recession and to fight high levels of unemployment, if that happens, then that really puts a bad effect on inflation even more, right? Cost of borrowing goes back down, and we're back to where we started. And in this time around, things are only worse. Inflation is higher, so it's more a supply issue where the main two culprits, prices need to come down for agriculture, right? So some of the things that are used globally, corn, wheat, rice, some of those things, agriculture stuff, food prices, which obviously are going to be meats, poultry, eggs, all that stuff, and then energy prices, right? Gas, piped gas, electricity, fuel, oil, all those things. So it's just a really complex situation right now. And the Fed pivot will be great for the markets, no doubt. It'll be bullish for the markets, but is that going to be great for the economy though? That's the real question. And right now it's just a very, very disconnected situation where what might be great for the economy could not be great for the markets, and vice versa. So ASML, any thoughts? I've actually, I think, done one analysis on ASML before. I think the valuation is really low. It's very attractive at these levels, no doubt. Okay, so this right here is some technicals on this. Okay, so this right here is apparently the overall chart that I have on ASML. I think I did a fair value calculation on this. And I think the fair value was much, much lower than where we're trading at right now. 31 times earnings, 14 times cash flow, 9 times sales. So it's certainly a little bit higher at the moment. So it needs to drop a lot before I can, get a little excited with this company. So support 352 is what I'm going to be watching right now. Let's take a look at XBI. Is XBI starting to break out a little bit? So going over to the daily chart here. So this is, very nice bull flag that we're seeing with XBI. So we'll see if it continues to break outside above this bull flag, and the next target I'm watching is all the way up to $96, $97 for this. Ray Dalio is heavily shorting ASML. That's good to know. Please look at Kellogg's and Colgate, some of the best performing stocks this year. Okay, let's take a look at Colgate first. CL, I think, is it, right? The company name. So year to date, this stock is, down 4%. And dividend yield is 2.29%. So lots of consolidation is what we can see here, right? So it's just been going back and forth, support at $74. And we've got a very strong resistance here sitting all the way up to $85. So I think it's an ideal situation for a swing trader, right? You're seeing so much consolidation here in the middle of that range, going up, down, up, down, up, down, up, down, up. So it's just like back and forth here in that range. So support, I would watch 74, and resistance, I'd keep a close eye at $85. So right now, definitely moving up very nicely, but also starting to get to those overbought levels for Colgate. All right, so Tesla making a new low of day, down over 4%. Did get a little bit of a relief here, but of course selling right back down with oil also selling off quite a bit. So let's take a look at Caterpillar. So new 52-week low for Caterpillar as well. Dividend yield has jumped up to 2.69%. I think I've done one analysis on Caterpillar. I'll update a lot of those in the future. I'll do like an updated analysis on these companies. So this right here would be the support right now. It's literally trading at a support here, 172. That's a resistance coming in since 2018. So we were getting rejected at those levels, which will be the next potential support here, which is where we're trading right now. And overall, still in this downtrend, lower highs and lower lows. So of course, many stocks are trading in that range, and they do have earnings coming up. So I think they have earnings later this week. Let's see. They have earnings actually next week. So we got Pepsi on the 12th. We got Progressive on the 13th. And then, so Caterpillar was on the list here somewhere. So July 28th, is it? Okay, so they are reporting towards the end of this month. There we go, Caterpillar right there, July 28th. So they're going to be reporting with a lot of companies like Apple and Amazon. They're reporting the same day. But 172 is going to be that support right now. Tesla will drop more than 40%. Let's take a look. Right now, it is down a little bit over 47%. So it's already down over 40% from its all-time highs. But support is going to be 620 right now. Down 4.5% today, 650. Quite a significant drop. Dow down 1.9, Nasdaq's only down 1.6. Certainly energy is taking most of that pain. So look at that. Look at this divergence playing out again. Interesting. So again, higher highs and higher lows for this particular index, which is QQQ relative to SPY. And this right here is still making lower highs and lower lows. So I've done a whole video on this divergence. So very, very interesting. This thing's up over 40 basis points today. Stefan, do you own any Bitcoin, Caddy? No, fortunately I don't own. Well, in this market, I would say fortunately I don't own any Bitcoin, but I don't own any Bitcoin. Yes, that's a great point, Igman. If commodities are dropping, shouldn't that mean that's easing inflation? Yes, so if oil prices keep coming down, that certainly is going to be a very bullish indicator for inflation overall once we start to get those reports. So we got to still keep a close eye on all the other commodities, but the main one obviously is oil. If it keeps dropping back under $100, sub 90, sub 85, then I think that should really benefit the markets from an inflation standpoint. All right, everyone. So that is going to be it from me. I hope you all enjoyed this live stream, enjoyed the morning market updates. Make sure that you drop a like and, of course, subscribe. It is going to be a shorter week. So, Anand, thank you so much for asking. Doing well. Had a lot of rest this long weekend. So, fully energized to go after it. So, again, thank you so much for joining. I really appreciate it. Make sure that you drop a like and, of course, subscribe if you're new to the channel. We talk a lot about fundamental analysis, technical analysis. So, David, I'm going to be doing an updated video on Truly very soon. So I'll do like an updated video on them, like a dedicated analysis on them very soon here. So again, thank you so much. And as always, Patreon link, Discord link down in the description if you want to join. And of course, get access to all the private videos, tutorials, and buy into alerts, the calendar updates. Everything is downloadable for you guys to access as well. So thank you so much. Have a great day, and I will see you guys tomorrow for another